Hi, my name's Kevin Blanche. I'm going to talk today about the plunge we had on the Dow yesterday, why and what happened. You've heard all kinds of talk. We lost 1,000 points, 10% of the market in 8 minutes. Now, why did this happen? You hear fat-fingered trade. Well, what is a fat-fingered trade? A fat-fingered trade, all that means somebody on a trading desk, the term comes from this. Somebody punched in a billion instead of a million. Now, even if that did happen, and I take that all with a grain of salt, I mean, you're on a major trading desk, Citigroup, and they're saying that some low-level employee had access to trade a billion. I don't think so. But even if it did happen, still, it's not going to tumble the Dow 1,000 points. There is a bigger reason why. And the bigger reason why is computer-driven hedge funds. I've been a derivative trader and a trader for 30 years. And I'm going to talk about this explain. I'm between careers as far as derivative trading. I actually poured concrete this morning. That's why I'm dressed like that. I'm a construction worker, believe it or not. But here's what the problem is. This fall, as I was switching careers, I got serious about applying for different hedge funds. I've worked in the hedge fund industry off and on, like I said, for 3 decades. And I started looking at all the sites that were hiring hedge fund guys, and they were all the same thing. Mathematical PhDs, mathematical PhDs, mathematical PhDs, 500,000, that's all they want. Well, I started to think about it, and I understand what computer-driven hedge funds are all about. And I knew they were big, but yesterday proved how big they've become. Now, this is how it works. You hire a mathematical PhD, he builds a computerized matrix of trading. Now, I knew these things were going on, they're getting manipulated, and this is getting scary. Look, they work like this. The computer trades them, they take all the emotional out of them, they're trying to pick up a few percent here, a few percent there, and they completely trade. They've got derivatives hooked in with the equities. So, for instance, yesterday we see Procter & Gamble plunge. That was supposedly the fat finger trade. And Accenture. Okay, so it's like this. Say you're a big computer-driven hedge fund, and you know how the other computer-driven hedge funds are. You're a math guy. You kind of got an idea how they're working, the majority of them. So you do this. You trade a block of a company that you have, a big block, several million shares through the computer. Okay, what happens, obviously that's going to knock down the price, maybe 10, 15%. Before you do that, the computer loads up on the derivative underneath it in the options market. Okay, so yeah, you sell, make a big sell, you lock it down, you actually knock the stock down, you pick up all that money on the derivative, then you rebuy it in. These things are so sophisticated, built that way, and they happen fast, right now. Well, what happened yesterday exposed what's going on. And what kills me about it, Washington, everybody's having a fit about even regulating derivatives a little bit. How are they going to regulate this? This is so far over Washington's head that is unbelievable. They can't even understand derivatives. Listen to the Senate hearings. I mean, these guys, it was like these guys are sitting there. It was Goldman Sachs. It was Chinese to these politicians. There's no way they can regulate this. Harry Reid said the other day that the Republicans are looking for a way to keep making love to Wall Street. Well, if they've been making love to Wall Street, what has CNBC been doing? I mean, you watch CNBC, you got Bartiromo, you got Joe Kernan, you got Kool-Aid Kudlow, I call him. These guys support Wall Street to the death, to the end, the most corrupt things. Remember this. When I graduated from college years ago, I live in Utah, so we spent a lot of time in Las Vegas. I actually worked in the casino industry for a while in the finance departments. People that I know are bigwigs down there. Sanford, everybody knew for years and years and years. I worked for a hedge fund. We knew for years and years and years he was a con artist. Remember the interview CNBC did with him? Oh, tell me this, how does it feel to be a billionaire? Oh, it feels good. We knew then he was a whale in Las Vegas. He would come in. My friend who's an exec for the Mirage says he is the worst gambler we ever seen. We've known this for years. He would come in there and drop millions. I mean, he was one of those guys sitting there playing $10,000, $20,000 a hand for days. Wall Street knew it, and here's CNBC supporting this guy. Oh, how does it feel to be? Oh, it feels good, Joe Kernan, Marie Bar. It's pathetic. It's sickening. But what's going on now with these computer-driven hedge funds, if you've got money in the market and you're a hedge fund or you're a big investor, 5 million, you better figure out a way to hedge yourself on this, because this isn't the first time this is going to happen. This is going on more and more and more and more. It exposed the major problem. This morning on CNBC, they had Ned on there. I usually don't agree with him that much, but boy, did I agree with him this morning. I'd never seen him so ballistic. It was about 4 o'clock in the morning our time. I always watch the market early. And they had one of the traders off the CBO floor, one of the smart ones they have. Both of them were ballistic. This guy, I thought Ned's head was going to blow off. He was right on this. He's absolutely right. He says, if you're the average trader and you're sitting around there, say you got a couple $100,000 in one of these stocks, you're sitting in front of your computer screen, boom, you see these things melting down, of course you're going to panic out. You know, and you're not hedged up. You know, and they say, okay, we fixed it. We broke all the trades. What about all the derivatives got traded? Let's get real. You know what the puts were trading on Procter & Gamble? The May puts expire in 2 weeks. You could have bought them for $10 a piece. You know, within minutes. They were trading at $4,000 or $5,000 a piece, more than that. So here you're a trader holding all these things on the floor. The guy from the CBO this morning said all his years of trading, he'd been there for decades. He says he never seen madness like was down there last year. I've been on that floor. I've worked on that floor. I can imagine it was total hysteria down there. There were billionaires and millionaires being made left and right and lost like crazy. I never seen anything like it in all my years, and I've been trading the stock market since 1976. So my point is, my name's Kevin Blanch. My website is stuckodamage.com, which is a concrete construction website, but I'm looking for a new gig. My phone number is 801-866-8956. I'm looking to go back into the hedge fund. I know how to hedge these things. So if you're a big investor, you got $1, $2, $3 million in this thing, and you think you're hedged up, you think you're covered because you got some high dividend stocks, trust me, this is complicated. You've got to know how to risk to always cover this, because this can happen. This is going to happen again. Mark my words. This is going to happen again. These computers start kicking in, and there's so many of them and so much of them, and everybody says, oh, it was just all the stop orders. No. It's these computerized matrices. The computers automatically start selling them, and it just shows you how massive this industry has grown into and how it's taken over. And trust me, Washington's not going to regulate it. This is so far over their head, they don't have a clue. This is Mandarin Chinese to Washington. No clue whatsoever. Thanks.